Hey, this is Harold. Today is Friday, February 27th, and in today's video, I'm going to be going over an update on my Profirm account and the trade that I took today. As you guys can see, the account is pretty much break even at 50,100. The maximum loss limit has risen a little bit because it trails, and at one point I was at 50,500. 7 trading days, so this is in the past 2 weeks. I'm pretty much break even. Loss, win, loss, win, loss, win, loss, win, right? So I just haven't really been able to catch a win streak after I passed the eval. Something I did realize is that if I pass the eval a little bit faster, so something for next time, if I did pass it a little bit faster, I would have had those extra winning trades in this account, not the eval account. So going into the trade, today we had a loss of $416, 8-point loss on ES, planned R multiple of 1.48, an initial target of $612. Going into the daily plan, price was opening right over here, right above the weekly value area low. My plan for today was simple. If we were to take longs, I wanted to break above this previous day value area low. If price was able to break this level, then I was looking to take longs targeting the weekly value area high right here. To the downside, I was looking at this weekly value area low. If price was able to break this level, then I was looking to target the monthly value area low. Something I failed to notice during the market open was that we were already pretty extended. So we were already pretty extended from here pre-market, and we were opening at a point of support. What I should have looked for was a potential bounce, a potential fake out like we did get here, and a bounce and a retracement because price seems to have already been extended, right? We broke this, we extended, and it's very natural for price to retest, but I didn't really think about that, and I was looking to just continue shorts, continue the momentum that was created yesterday, right? We got this whole move yesterday, so I was looking to continue that to the downside. So I feel like if I was able to just notice that, I would have been able to maybe even not take that trade today. But I think the trade that I took today was pretty unavoidable. Going into the charts, right, price opened here. We pretty much consolidated for the first 10 minutes, not going anywhere, sticking in this 10-point range. And eventually price broke out, and I was targeting the monthly value area low. I ended up getting stopped out. Looking at the footprint, this was the entry candle right over here. This was the entry candle. And I entered on a retest right over here. And I placed my stop up here and targeting down here, right? So the confirmations that I got were pretty clear. We had B shapes, multiple B shapes formed to the downside. We had high volume right here, 15,000 lots, negative delta, pretty good. We had an increase in volume, good expansion candle. So I believe that this was a pretty unavoidable trade. I think no matter what happened, I would have probably taken this trade. I failed to recognize certain things while we were live, and this is something I'm still trying to get better at, because when price is moving quick live, it's hard to recognize stuff like this at times. But for example, if you look at all the buy volumes here, all the high volume nodes that were accepted were all buyers. all the selling volume was below the buying volume starting from this point out, right? So it wasn't actually as good selling confirmation as I thought it was. I was almost fooled by the shape of the candles, by the shape of the footprint over what was actually going on inside. There was a lot more aggressive buying going on inside than aggressive selling. And eventually that aggressive buying actually held right here. Right. The aggressive buying held. And then we had a move to the upside. And this move is a pretty good indicator in terms of volume and just how it looks that my play is going to be invalidated, right? Usually when we get a good breakout candle, we want continuation quick with more volume, right? Or more aggression from the sellers. But here we held and then we had to move right back up, closing back into this weekly value area low on even stronger volume. And that is something that usually invalidates my play, but it's not something that I can avoid. This is just part of the statistic of my edge, and 9 times out of 10 I'm going to be taking this trade. But something I can think about differently is usually I enter on a close of the candle, right? So usually I would enter right here. But I didn't because we were already so close to our target. If I entered here at 68.42, our target is at 68.35. That's not even a 1-to-1 RR trade. So I thought that the risk to reward was not viable. So I told myself, okay, I'm going to wait for a retest of price. So I waited for price to retest, and then I got in because at least this offered a somewhat decent RR. But usually that's not the type of trades that I take. So when I end up doing this, I end up looking for a retest. I get a little bit emotional, and I feel a little bit more forced to make a trade because now I'm in my head. I'm not comfortable with this, and I'm already thinking to myself, oh, is it going to come up more? Do I have to wait more? Or is it even going to reach this point? Right? So I started to get in my own head a little bit. So going forward, I think for me, I should just eliminate this type of play. If price is overextended from our level, and this isn't really overextended, but if we are too close to our take profit by the time the candle closes, then I think I should reevaluate and wait and say, hey, okay, we did break a level of support. Let's see if we can break one more, because this is another valid area. This is another valid area to enter, right? And if we can get even better confirmation on this play, then there's a lot higher chance of us continuing to the downside and continuing that trend for the day instead of reversing. So yeah, that's something that I learned today. Gonna be more careful about the buying / selling volume that's occurring on my breakout candles, and look for trades that are in confluence, not aggressive buying when price is breaking to the downside. I would want more aggressive sellers than buyers here as well when we're breaking to the downside, and just being able to sit on my hands a little bit more. I am decent at sitting on my hands, but when a trade presents itself, that's when I get a little bit more antsy. I want to work on that and just say, hey, there's always going to be more opportunities in the market. This can be missed, right? This is an even better opportunity here. And if I think with that logic, I think I can take even better opportunities in the future. So that is it for the month of February. There's no more trading days. Starting from next week will be in March. I'm most likely going to be posting a monthly review, just things that I look out for after every month, the stats that I look at to see what I can improve, how I approach just coming into the next month. So yeah, just look forward to that, and I'll see y'all soon. Peace.